Okay, let's get to some questions from the last market outlook. I know I'm late getting this up, but I was flying back from Costa Rica to Canada on Wednesday, and it door to door, 14 hours. So I didn't feel like doing it yesterday, so I'm doing it now. 111 comments. So I don't know if I'm going to get through all the questions, but we'll get as far as we can. Can you please talk about your overall portfolio? I really appreciate new positions. Learn a lot by understanding how you put everything together. You really wouldn't, because the vast majority of what I have is managed externally, and then I manage a smaller portfolio myself, of which a large position is REITs, Canadian REITs, and I do have bonds and TLT, and then of course I sell puts, and I've already told you some of the items that I sell puts on, or some of the underlyings I sell puts on. Oxy is in there as well. On Semi is in there, and on and on. So I don't optimize that one. That one is more like a playpen. I just have fun in it, and that's it. So you wouldn't learn much. And this I don't even look at it really. Maybe quarterly when I get the quarterly reviews, you look at the performance, but I couldn't tell you what I held. Doesn't I don't know that it really interests me that much. Elon believes Tesla should be valued at the extent of current U.S. debt levels. Well, he said someday, so we don't know when that someday is going to be. Not sure how Kathy Wood is still allowed to have a platform. Yeah, when you destroy that much value and you're still in business, that to me is shocking, that you could be that bad at what you do and still be in business. Fast forward a decade, copper sits at the $3 to $4 range. What did your thesis miss? Well, that's an interesting way to look at it, is to think about being wrong and then ask yourself what went wrong. A very strong US dollar. When I say strong, I mean record levels never seen before. So we have global currencies that have collapsed, and the U.S. is the last one standing. At that point, it would be so strong that everything would be cheap in U.S. dollars. It would be super expensive in other currencies, but it would be cheap in U.S. dollars. That could be one. Innovation that discovers a conductive material that is just as good as copper, so that electrons move at half the speed of light, because that's the speed of copper. So we discover some new material that is abundant. That would be about it. Another really super big find, where you have 200 years of copper all in one place, and it's really cheap to mine, and it's close to the surface, which that doesn't exist. So a meteor, a huge one, heads towards Earth, but kind of on a near miss and just enters into orbit, and it's solid copper, and SpaceX can mine SpaceX can mine it and be worth $30 trillion. Maybe that would keep copper prices low. Adobe, when you don't cancel your trial, it forces you into a full year subscription. Yes, it does. That happened to me. The last university I was at, you get 1 year for free, and then you have to cancel. But it doesn't tell you when to cancel. It doesn't give you a notification. It doesn't give you a 30-day warning. You just see in your bank statement one day that there was a charge. So you call to cancel, and it was $400 to cancel. It was $480 to finish out the year, or $400 to cancel, and it was just a ripoff. It was just a giant ripoff. I didn't pay the $400. I just stopped the payment at my bank. I just said, I didn't authorize this. I don't know what this is all about, and then that was the end of it. Keep that in mind. What I just said. I authorized the bank to stop it, because we're going to come back to that thought later on. Adobe didn't do anything. They want to steal money from people. They really don't want a legal fight. They don't want to hire lawyers. They don't want to throw any money at this. They will extract what they can out of you, and then that's it. I want you to think what you need to get that done, you need somebody in a room thinking that shit up. You need somebody in a room thinking, I know what we can do. We can trick them. We can hide things. We can do this. And then once they're in, we can charge them a whole bunch of money if they want to leave. Like, somebody had to think that shit up. I want you to think about what type of person that is that sits in a room and thinks that stuff up. And then the type of company that says, that's good. Yeah, let's do that. CBO raised its federal budget deficit from 1.5 to 1.9. Slowly making my way over to your side of the fence. It will take a debt crisis for them to stop spending, and I'm worried if the Fed goes to the zero line, they won't learn anything, continue to spend. Yeah, I think it's deficits as far as the eye can see, because that is just what politicians think they need to get reelected. And it's not about doing the right thing for the country. It's about doing the right thing for the party. It's about getting reelected, period. Long enough to get your pension, and then who the hell cares, right? There is no public service anymore. It's all self-service, and then when they're done, they go on speaking tours and book tours, and they don't really care. But you're right. It is going to take a crisis to stop it, because they won't stop, and the Fed will have to go to the zero line because it will have its mandate of full employment. And if you've got to extract a whole bunch of money out of government spending just to pay the interest expense, at some point it's going to affect growth. The Fed will have to lower interest rates to spur activity somewhere else. The end game is the zero line. The true end game is a debt crisis. And maybe the real end game is the end of democracy. Because in its current state, it is broken. It is broken. So unless a hero comes along, I think you are witnessing the fall of Rome. Rome being democracy here. Which will happen over the next 20, 30 years. It's not going to happen tomorrow, but it is slowly eroding. Sunday's live stream, a question was asked regarding that when the Fed begin their cutting cycle, do you expect equities to go even higher, which you would normally expect given present values will be discounted to lower discount rates. But the questioner on Sunday also asked, could you see a scenario where the Fed cut, but we still see market correction and recession? So if the Fed is cutting rates because the economy is falling off a cliff, or there's a debt crisis, a credit crisis, and credit dries up, then yeah, you'll have markets that will go down. So it's a matter of why is the Fed cutting? BOJ releasing April minutes from monetary policy meeting. Some officials were noted marking a weak yen's contribution to inflation, emphasizing the BOJ must respond with monetary policy if exchange rate movements alter its view on the outlook and risks. Give some commentary from your experience about potential expectations with this and the knock-on ripple effects. Japan has intervened before. They've got plenty of treasuries. You don't really need a lot to get the ball rolling. You just have to start it, and other traders will jump in on it. But it's short-lived, and I think they know that it is short-lived. The only way they can get a longer-term effect on the currency is a change in interest rates. But the intervention really isn't going to work. I was looking at it broadly as well, as more directly yen to peso as well. I don't know what that means. I remember you mentioned Trump had been vocal about weakening the U.S. How do you suspect he would go about doing this should he be elected? I don't really know, but he is he was leaning towards a Treasury Secretary that, number one, would be loyal to him, and number two, shared his view on a weaker U.S. dollar. There has been pushback from experts saying, well, saying you want a weaker dollar and getting it done are two different things. So it's a good question. How would they get it done? I don't know. I don't know that Trump cares too much about merit. I think he cares much more about loyalty, and then he'll get whatever merit he can. So I don't know that he would have a Treasury Secretary that would be the best pick or the best qualified. So it could just be lack of confidence. That could, just get somebody who's really loyal but not very good at what they do or doesn't know anything. Make Ivanka Trump the Treasury Secretary, and you would have a crisis of confidence, and the U.S. dollar would drop. There's how you can get it done. Make her Treasury Secretary. Could you please share the link where you got the S&P spreadsheet attached in the video below? Yeah, just look in the description box. All of the links to everything is in the description box. 2 questions. What is your approach on systematic trading, managed futures that trade purely data points? What is my approach? I have no approach. I don't do anything like that. What's the next question? I believe you should be familiar with Nassim Taleb. I was wondering your opinion on some of his perspectives, particularly about not watching financial news and on most economists being charlatans. Well, that's just having a misunderstanding of what economics is. Economics is not meant to be a forecasting tool. It is meant to be a policy tool. So it gives you different ways of seeing a complex system, because in complexity, especially the economy, there's no solution with complexity. There are only trade-offs, right? Raise taxes and something else happens somewhere else. So you'll never get a complete solution. You'll just get different states. Well, models can help you understand the different states that you would have. But the true power of economics is for policy, not for forecasting. So I don't know that I would call them charlatans. This sort of suggests that he's not understanding what the role of economics is. It's like saying, I've listened to a whole bunch of sociologists, and they can't pick stocks. They can't pick stocks at all. They're charlatans. Yeah, but that's not the role of sociology, right? Economics, nowhere in economics does it say, hey, here's how you pick stocks. I think he's using them the wrong way. Cap REIT, I assume the 2018 debt is set by government. It is. Do you think there's any significant risk of that date being set to a newer date? In time, it will roll forward. In time, yeah, but I don't see any risk of that yet. If you rolled it too far forward, you risk hollowing out investment, because who would ever invest in a new property only to rent them at rent-controlled levels? Who would ever do that? You would, if you want to create a more significant housing crisis, do that. Right? The date has to be old enough such that the building is sort of, I guess you would say, more out of date, and by like 2018, by setting that date, you can still encourage individual unit capex, because then you can still get a 3% bump, which is 3%. It's not 3% a year, but it's 3% once, but that 3% is like an annuity. But no one would ever build a new building. Like no one, why would they? No one would ever build a new building, and then you'd have a serious housing problem. So you can't. I don't know that you'd see it moved up to like 2022. It would, if government did that and they had this sort of trailing stop in behind buildings, it wouldn't take long before developers said, "You're only going to change a date. You're only going to change a date and not give me enough time." So no, I don't know that it would change that quickly or that easily. Any new updates on the applied level financial projection modeling course supposed to launch in August? That is September. Duration of the course, I really don't know. I never know how long these things are. They take what they take. Maybe it's 12 weeks, maybe it's 18 weeks. I don't know. They take what they take. What company will be the focus? I'm still thinking Tesla would be fun to do, because then we can see how we would value more venture capital type pursuits within a larger organization. So making cars would have one type of cost of capital. Selling humanoid robots, you can't use the company's cost of capital for that because it's a riskier project. It's not reflective of the cost of capital of the car company. So I think it would be interesting doing it that way, but it can get complicated. I don't know. We'll. It's still too early for me to tell. We'll see what happens. Cleared level 1, holder of 1 fee to completion. I do have access of applied level. So my question is, does it up for renewal later on or sort of come along? A lot of small words are missing that would make that an English sentence. I have access. Question is, is it up for renewal or does it come along with 1 fee to completion? Well, it does not come along with the 1 fee to completion. You most likely have just some applied videos that I did, but you don't have the applied level. If you didn't specifically pay for the applied level, then you do not have the applied level. Purchase applied options in 2021. Will I be grandfathered in for all additional applied series releases? No. You only have applied options. You don't have the sector studies or portfolio, the portfolio construction module. So no, you would not. Not with just applied options. No. I mean, anything I add to the applied options, sure. But new positions is not going to be in applied options. About a year and a half ago, just to confirm, our current subscribers grandfathered pretty much going forward. If you have the applied level, the whole level, then yes. Do you see a scenario where you might start charging everyone, including the original subscribers? Not really. A scenario where I would charge them. Well, I can't think of anything off the top of my head, so I guess that would be an answer. From a pure economic perspective, if the U.S. introduced 100% tariff, well, you don't have to say if, they did. They introduced 100% tariffs on Chinese EVs. Who is more likely to benefit? U.S. domestic auto producers. Shouldn't average American consumers be upset about this move? They should, as they won't have access to affordable EVs. Well, yeah, you're right. They could otherwise get a $13,000 or $14,000 BYD, and it was a BYD that drove me to the airport in Costa Rica on Wednesday morning. If you'd closed your eyes, you wouldn't know that you were in anything other than an average car, right? The ride was perfectly fine. The dashboard was nice. It was a nice car. I had no issue with it. You know, it wasn't like I was in it saying, "Oh, this is a really cheap car." It was roomy. I had three big bags. There were 2 passengers. Fit everything. But yeah, it would be the American people who would suffer. And if they did buy a Chinese EV, it's the American consumer that pays the tariff. It just keeps the American consumer down because now they're forced to buy the more expensive EV. But the U.S. has a history of this, right? The U.S. has a history of winning, not because of competition all the time, not because they're that good, but because if somebody is got an advantage on them, they changed the rules of the game, right? So China has overproduction of EVs, and now they want to export them. Well, when the U.S. exports something, they're exporting something. When China exports something, they're dumping it, right? See the words, the language? They're dumping it on the market. Dumping has a very specific term to it. It's selling it below its cost to hurt producers in other countries. They're selling it in other countries at the same price they sell it in their own country. That's not dumping. So the U.S. does that a lot. Whenever they're faced with competition they don't like, they change the rules of the game. It would be interesting if China set up a U.S. facility, if they would allow it, right? I mean, that would be interesting. But yeah, it's tariffs really only hurt the consumer. Agency is gradually shifting its hedge composition to favor swap-based hedges over treasury-based ones. Why are they doing this? Well, if you have interest rates at the peak and you think that rates are going to go down, you'd want to reduce your hedges. The other issue is with Treasury is you are at the whim of the movement of the long end of the curve, up and down, up and down, up and down, which you could hedge and you could lose on your hedge because of the direction of the long end of the curve, and you got to keep rolling those forward. With a swap, you have one fixed rate, and you have a floating rate, which we know right now is relatively fixed because it's not dropping. So you don't have all of that crazy fluctuation, all of that volatility in the long end of the curve. So it could be to reduce volatility. It could be to make sure that that they don't use a hedge and then end up losing on the hedge while they lose on the underlying, losing on both legs. How important is it to measure the cash conversion cycle of companies? Is it more useful for inventory heavy companies? Have you seen much value in watching this indicator? I don't use it, no. No, I don't use it. So I don't know if it has value. I think maybe for certain types of companies it may have value. I think for retail, a retailer that you think is slowly dying would be important to look at, because the cash conversion cycle would get longer and longer for a retailer that was slowly dying. So I think there it might be important. But you do have to watch the type of inventory that a company has. For example, Walmart has a very particular type of inventory system where they'll take your inventory into the warehouse and they'll put it on the shelf. And if they don't get the number of turns per year that they want, they will send that inventory right back to you and you pay for the shipping, which means it's kind of on consignment. So even though it's listed as inventory and as an accounts payable, it isn't really, because they have the right to send it right back to you. So I don't know that it would be of much value there. You probably wouldn't see a very long cash conversion cycle because they do manage the turns per year, and anything that's not turning, that's it. It's over. It's pulled. In your real yield section of the Outlook, you discuss break-even rates. Can you find this, discuss its relevance? So you have a fixed rate, 10-year fixed, let's say 4.5%, and then you have the real rate, 10-year real rate, let's say it's 2%. The difference between this is, 2.5. The difference between that is 2%. So if you think inflation is going to be higher than 2%, you'd like to have the real rate because you'll get the real rate, and your capital, the future value that you get, will grow at the rate of inflation. So you'll make more if you think that inflation will be higher than this. This is we call it a break-even rate. It is the rate at which you would be if you think that inflation over 10 years will average 2%. You would be different between the nominal yield of 4.5 and the real yield of 2.5. You'd be indifferent. If you think, well, no, inflation is going to come in lower than this on average, you'd rather have the nominal rate. So it is a break-even rate in the sense that if you did expect that, neither the nominal nor the real would have an advantage. You'd be indifferent between them. MicroStrategy looked at one of the convertible notes for $600 million. Dilution effect of that conversion represents an increase of 1.3 of outstanding shares. Outstanding shares today, but you have to do the whole chain of convertibles, right? So you have a bunch of convertibles before that $600 million, and all of them have anti-dilution clauses. Plus, over the last year, before we got to this point, this is where we are today, MicroStrategy issued, I think, 23% more shares. So they say that part of their strategy is to issue more shares to keep buying Bitcoin at specific prices. So all of these would have to have anti-dilution clauses in there. So if these convert, well, then this would probably get 1.5 dilution. If this converts, this might go to 1.9%. If this converts, this might go to 2.4%. If this converts, this might go to 3.1%. See what I'm getting at? It's 1.3, assuming nothing else converts and assuming that MicroStrategy issues no new shares. Now, looking at it in terms of the dilution of shares isn't going to help you. Take the 600 million. divided by the price of Bitcoin, BTC, the price of Bitcoin today, and you'll get a number of Bitcoins that 600 million represents. Take that number of Bitcoins and divide it by the total amount of Bitcoins that MicroStrategy has, and you'll get a percentage that's greater than the 1.3. So that the 600 million today represents a greater percentage of the asset value that has value rather than it does the shares. But keep in mind, you have an anti-dilution clause in there. You can't just get to 600 million and convert it. You have to convert the first ones and then figure out what the new conversion rate is. Convert these, figure out the new conversion rate. Convert these, do the same thing. Now, all of this will dilute the original shareholders. And you say, well, what if they don't convert? Well, if they don't convert, that means the price of Bitcoin didn't go up, which means they got to sell Bitcoin to pay back the bondholders. While you calculated today a 1.3% dilution at today's Bitcoin prices, the percentage would be more if you had to sell the Bitcoin to pay it off. The stock buyback again? Explain this again? I already did. What is the stock buyback period? Okay, I'm going to pass on that. This is something that you can Google. Stock buybacks. I mean, there's so much out there on that, and I think I've answered it twice now. Question on applied level content and positioning. Is it useful for small accounts to play along based on your guidance? I don't give guidance. I mean, a 10 to 20K US account in Interactive Brokers, would it be problematic to get in and out of positions? The amount of money you have has nothing to do with your ability to move in and out of positions. It's the liquidity of what you're moving in and out of that has everything. I can have $20 billion, but if I buy an office building, it's hard to get out of. I can have $2,000, and if I buy some shares of IBM, it's super duper easy to get out of. How much money I have is not the deciding factor of whether something is easy to get in or out of. Let's see. Also, small accounts have limits on one individual account. Can or can't trade bonds option. No, they don't. 10 or 20K has no limitations. No. Just looking for input on how much of the content might be unreachable by simply having less money. Not much. It is meant for a retail investor, not an institutional investor. Everything I talk about is for a retail investor. Now, when I use examples of stocks, those are not recommendations. Do not take them as recommendations. I'm not saying go and do this. I'm saying, for example, if we used this is how we would set it up. For example. But I'm in no way saying do this or do that and do 50 or do 100 of them at a time. I'm in no way saying that. Just showing you how to set it up. But I can't possibly say, well, here's how we do a risk reversal. Now let me show you how to do a risk reversal on all 6,322 stocks that exist in the US market. It wouldn't make any sense to do 6,253 examples. So you do have to pick one and say this is how you would do it. And if you know how to do it on one, you know how to do them on all stocks that have options. You know how to do a risk reversal. So it is not a recommendation or guidance. It's an example. What option strategy can be used for fairly valued companies to generate income? Sell puts. If they're fairly valued, then they shouldn't have too much downside. You can also do straddles, 20 delta straddles, where you sell the call and you sell the put. Selling calls sometimes is more dangerous than selling puts. But if you feel it's fairly valued and you've looked at the chart and it's been doing this and it's got a long sideways trend for quite some time, you can, as it runs up, you can sell the call. As it comes down, you can sell the put. You step into a straddle, you can do that. I prefer just selling puts on things like that. I don't feel comfortable selling puts and having underlying being put to me given price of stock. Well, I thought you started with the premise fairly valued. Now you're saying you don't like the price of it, which means you think it's overvalued, because you started with fairly valued. Premiums generated from selling in the money puts are low. In the money? You mean out of the money? Is it better to skip it and find a better underlying? If you don't want the underlying put to you, then I don't know that works out very well. I only sell puts on stocks I don't mind owning. I feel comfortable with that, and if I do have to own them, I have to own them. If I don't have the capital, well, then I got to be very safe, which means I want to find undervalued stocks to sell puts on, as opposed to fairly valued. How would you go about finding all the stocks that make up a subsector peer group? All the stocks? Do you need all the stocks? I don't know that I would be looking at all of them. Do you want just profitable ones? Then you can look at the S&P 1500, which is the small cap, mid cap, large cap. And there are ETFs that track each of those and the sectors for each that you could look up what's in there. I don't know that you'd want all of them. Is there? Yeah, I don't know that you'd want all of them. Sometimes you can find a sub-industry where there are 50 different stocks, or 50, I wouldn't say 50 stocks. There might be 12 stocks, but 3 of them make up 95% of sales. Who cares about the rest, right? When you have 3 that, or even 3 that make up 80% of the revenues of the sub-industry, who cares about the others? If anything happens, it's going to be one of the 3. Is there any finance podcast you'd recommend for learning or news? I don't really listen to a lot. I don't really listen to a lot, so not really. Best way to save on taxes for capital gains in the U.S. Personal brokerage account or an account under an LLC S corp. Personal. Go personal. Could you please guide me through the pros and cons of both? Not really. If you have it in your corporation, you may get I don't know if you actually get a lower capital gains tax, but your retained earnings account will have different values whether you had passive income or active income, and then when you take it out, you have to pay the difference between the corporate rate and what your personal rate is because you're taking it out as dividends. It turns out that it ends up being a little bit more, like a couple % more that you pay in tax. you opt to do that because what you do save in the tax to begin with can be carried in the account and earn a return on, but it is more expensive. So I'd say do it personally. But this is the U.S. I'm not a U.S. Tax expert or even a U.S. Tax. I wouldn't. What's the opposite of expert? Cocktail party knowledge. I don't even have cocktail party knowledge of the U.S. tax system. How important you think is DuPont for financial statement analysis? Well, you tell me what you're trying to get done, and I'll tell you if I think it's important. Can it be done on companies of all sectors? Yeah, it can. I mean, not all 5 ratios will mean anything, but it can. But what are you looking for? When you're doing the analysis, what are you looking for? And if you don't know what you're looking for, then what are you looking at it for? Right? This idea of doing a whole bunch of ratios on income statements and balance sheets, what are you looking for? I seem to think if there's a good story, I got something. Now, if there's a good story and there's 3 companies, maybe I'll do some ratios. Maybe I'll look at which one seems to be doing a little bit better. But other than that, as long as I have a good story, I'm good to go. For the retail investor, I think a lot of financial analysis is a waste of time. For the retail investor, a lot of it is a waste of time. Not that it's all a waste of time, but breaking down a whole bunch of ratios, I don't know that there's a lot in there for the retail investor in terms of the return that they would get off of that homework, because their accounts are so small to begin with. CPI, PPI video from last week, you said inflation in recent years was due to closing then reopening the global economy. What about some of the most massive government spending as a percentage of GDP ever? Yeah, that didn't help. But you've had massive government spending before when the economy never shut down. That didn't lead to inflation. So if you have that in the past with no supply chain disruptions and there's no inflation, then suddenly you have massive supply chain disruptions and the same amount of like government spending all over the place, and you get inflation. Do you suddenly say, "Oh, it must be the government spending"? Because you did see it before when there was no inflation. So I'm hesitant to blame government spending, but I will say that if you have supply chain problems and you layer on extreme government spending at the same time, it can only make that bad situation even worse. But if we're looking for the effect, what was the ultimate effect of all of this? It was supply chain issues. If you're breaking it down into different causes, like approximate cause, meaning the most the closest thing we can get to is you had supply chains broken down, and then you had all of this spending. Then you could say, okay, it was the spending. If you didn't have the spending, maybe the supply chain being broken down was inflationary, but it couldn't have been as inflationary as we saw. But without the supply chain being disrupted, that spending I don't think would have caused inflation to the extent that the supply chain on its own would have caused it. Regarding personalized pricing, I agree that it is likely regulators and politicians will jump into this, curb this practice, and that no one wants to pay higher price than other people for the same product. Purely theoretical economic perspective, doesn't this technically increase market efficiency? No, as each consumer's marginal willingness to pay is more accurately captured, which in turn better approximate the actual demand curve. No, it doesn't approximate the demand curve at all. Demand curve is, if we think about it, is not a matter of each individual. It's you have a price, what is the quantity? You have a price, what is the quantity? You have a price, what is the quantity, right? You get a demand curve. But what personalized pricing is doing is saying, this is your price, this is your price, this is your price, this is your price, and everybody's going to buy a seat on the plane. So it doesn't really figure out what the demand curve is. It figures out what your willingness is, so that the price you pay is a function of your willingness to pay it. So you can think of a skimming the market technique, where you introduce a product at a high price and then you slowly lower that price. You get everybody to buy at the high price, and then you slowly over time lower that price. This is not slowly lowering it over time. This is a skimming the market technique at a point in time, at every point in time. That when for example, when I was flying back from Costa Rica, and Naomi was flying back as well, her first checked bag was $35, mine was $50. Now, what is the difference between one person checking a bag and another person checking a bag other than a 40% increase in price, right? What difference would the handling of that bag be regardless of who it came from? It would be no different. In other words, there is no extra value being added from that checked bag, but I'll pay 40% more. Why? Because I'm older. And incomes and wealth correlate with age. So I am being billed based on my ability to pay. No other reason than my ability to pay. So you can think of that as a wealth tax, right? Instead of being levied by the government, wealth taxes are now being levied by the corporation. And now we're giving, with personalized pricing, you're giving the corporation taxing authority to charge a wealth tax based on what they think your willingness and your ability to pay is. My success is my success. You don't get to bill me based on my success. But that is where we are today. It is only a matter of time, because nobody likes that. It's only a matter of time before regulators and politicians start looking at this saying, hey, we don't like this. The rumblings are getting louder and louder. Not a week goes by that I don't read a story about that, and how people are getting more and more upset about this kind of thing. And it is upsetting. Given your position on the new level 3 tracks, I'm wondering if you feel similar for the practical module options. No, no. Currently studying for level 2 exam. Have the choice between analyst skills module focusing on equity research and the Python modules. Would you say the analyst skill module is more valuable right now? I don't know. I I haven't seen them. They're not for grades, so there is no point in me looking at them. So no, I haven't looked at them or assessed them or done anything with those. Planning to start the channel about philosophy that you mentioned. I don't know that I said I would start another channel, but that I would start introducing some videos around that. And it always comes down to time. It's time. It would be nice to do these, but I have to find the time to get it done. And I'm working on a fairly large project, a multi-year project now, that I'm sort of committed to. That is just going to take up significantly more time. I don't know. Would you be able to send some links to the experts on full self-driving or any? Oh, just use Google. My God, you don't need me for that. Just Google. I mean, you Google it on YouTube and make sure that you're you're looking at who is talking, what is their background. But there is no shortage of this out there. Just go ahead and use Google. Video is extremely engaging. I'd like to know from the community here, how do I begin to learn this stuff? Can anyone point me in the right direction? No one's answered that. I'm going to pass on that one. Diligently try to hear your videos on the applied module market outlook. Let's see, where's the question here? Practical level, horrible. Cannot connect all the knowledge and awfully bad at implementing. Live in the US and thinking to start an investment with 20K monthly contribution plans of 15. I intend not to be a trader. I'm currently 40. I don't need such money in the near future, so 60-40 portfolio. I agree, yep. Bond allocation, what's the pros and cons of 24, 25 year T-bond and TLT? The bonds themselves will give you higher yield, but less frequent cash flow. TLT pays you monthly. Bonds will pay you semi-annually. They may be less liquid than TLT is, but if you were going to hold them for a period of time, I don't think it really matters. Is it possible to start Income Factory with 10 delta options with the portfolio size? With 20K, it might be, I don't know how far you would get, but probably not, especially if the underlying is $50 or $60. As I'm investing on index level, probably not. How could I select the stocks for theta play? If you've seen what I've been doing, I take large cap undervalued stocks, trading. I take large cap value, like trading at low multiples, for selling puts, because I want stocks that are not going down. I don't care if they're going up. They can go up all they want. They can go sideways. I'd much rather have that, but I certainly don't want them going down, which means I want to make sure that we are deep in the value area. GM was very deep value for quite some time, still is, really. AT&T, same thing. So these are companies that are nice to sell puts on. Buy and hold investor. Is it okay, newbie, to tilt to a specific sector by selling SPY? You don't. Well, with 20K, you don't have the horsepower to sell puts on SPY. I would not even touch that. Or should I set aside separate fund for this? For example, against my 12K stock, I might set aside 60 to SPY. No, that's 7,200. You don't have enough. One option on SPY is for 100 shares at $540 a share. That's $54,000. You don't have enough for that. With 7,200, you don't even have the margin for selling a put on SPY. So no. On MES, maybe on MES, you might be able to get that done, but I'd seem to want to avoid the level of the market as best I could. Yeah. Besides copper and gold, do you like uranium? I know nothing about uranium. I think I've answered that over the last 3-4 months at least half a dozen times. I know nothing about uranium. During the rate cutting cycle, which would yield the most return given current valuations? Technology, utilities, or duration? I can't answer the duration. What duration? If you say, well, duration of 7, duration of 17, well, it would be more. Duration of 27 would be even more. So it would be, well, what level of duration? Probably not technology. Utilities tend to do very well, but tend, is not the same. Well, utilities do have a 100% record of outperforming in rate cutting cycles. Maybe, it's been the last couple of years have been weird, and today just seems to be even weirder that we needed ultra low rates to get to a multiple of 21.5 to 22 times forward earnings. Now we got ultra high rates, and we're perfectly okay with 21.5 to 22 times forward earnings. So if you see two different contexts with the same outcome, it can't be the context that's leading to the outcome. It must be something else, which means that it could be possible to have a rate cutting cycle and utilities become the worst performing, thereby creating the very first time we've seen it. Regarding what you said about efficient markets, may not be correct in the Sunday Q&A. If you believe that the market is incorrect about some information that's publicly available, but it does not correct after a few quarters, when do you take your losses and end the trade? Well, yeah, it is possible for a market to stay irrational for a very long period of time. Yeah, that's the game we play. There is no answer for these. Is it possible? Yeah. It's possible for a stock that's undervalued to be undervalued for years before it goes anywhere. Yeah, perfectly possible for that. So you have to just figure, well, if the rest of the market is not coming along for the ride, the rest of the market doesn't care about the facts that you're seeing. It's like Tesla's overvaluation. And it seems a lawsuit a day showing up about one thing or another. We found out today Tesla's European sales were down 34%. And the stock in the morning, even after that news came out, the stock still wanted to open positively. In the morning, it was trading positively in pre-market. You look at that, you say, this would destroy any other company, right? It's the shareholder base doesn't care. That's not what they care about. As long as there's this promised future, it doesn't matter how bad things are today, right? So, in a more correct world, Tesla would never have gotten to the valuation it got to, and it wouldn't have the valuation that it has, because after 5 or 6 years of promises of something being just around the corner and it not showing up, the market would have caught on that this guy promises the world all the time. The world is 8 years away, but everyone seems to think it's just around the corner. Robo-taxis and full self-driving this August, just around the corner. So yeah, you could, the market could stay incorrect for a very long period of time. Beyond Meat was incorrect for 2 years, right? So even Research in Motion was incorrect for a couple of years after it started declining. Blockbuster hung on for how long? GameStop, look at, really, there was no reason for it to run up it like it did 3 years ago, but that was a short squeeze, and it had nothing to do with the fundamentals of the company. So yeah, you could get into a situation where it does not matter how much homework you've done and how right you are. If the market doesn't agree with you, it's the same as being wrong. But that doesn't mean that the market is correct. It doesn't mean the market is inefficient. The market is wrong on Tesla. They're absolutely wrong on Tesla. The market is wrong on MicroStrategy, and I believe the market is wrong on Bitcoin. Absolutely wrong on Bitcoin, and there is a question coming up on Bitcoin. I did see it. And I will demonstrate how wrong the market is when we get to that. I say demonstrate. My answer will show you how I feel that it's wrong. Website you mentioned for tracking car inventory, is it free? Cox Automotive, and I think it's vAuto is the subsidiary. Yeah, it's some of that stuff is free. Just go to Cox Automotive, COX. I've been thinking about high-level thematic investing that looks at the idea of political ideology swing wildly from wokeism to conservatism and vice versa. I feel like the pendulum is swinging back towards conservatism. So I'm looking at things like coal, nuclear, gold. Love to get your take on this theme and whether you think there's any alpha to be had there. I don't really know that I would think, yeah, coal. I don't know that it's just governments saying we don't like coal that leads to a decline in the revenues for coal. There are human beings in organizations all over the place that really start thinking about, look, are we going to keep doing this? Are we going to keep doing this? Am I going to keep burning coal? Am I going to, or can I do something else? So there are good people all over the world that are making decisions to move away from things. I don't know that I would look to governments for that. But that doesn't mean that at the margin there couldn't be something. I think it's more likely to come in the taxes. That for the U.S., the easiest thing to play is the extension of the Trump tax cuts. To me, that seems to be the easiest thing to play. And also lower interest rates. Trump will browbeat Powell into submission or replace him. One of the two. The one thing that I can count on with Trump is the extension of the tax cuts and lower interest rates. To start to go into, well, he doesn't like EVs, he'll do this. Once I'm 2-3 steps away in my thinking that I have to make 2 or 3 cognitive steps to get somewhere, that's gone too far. They got to be like really easy shots to take, and those two are the easiest ones to do. I would look for much easier thoughts than that. Intelligent investor, you realize that in the 40s, cheap stock had PE of 4, the 80s it was 6 to 7, 90s 10 to 12, 2016 you said you expect this trend to continue forever, and in 10 20 years 21 multiple will be considered cheap. Because of this, you said you never short market SPY. Do you still believe this? Do you know if study chart from Bank of America accounts for this type of trend? I don't think anything really accounts for that type of trend. I guess it really depends on what you're looking at. It could be that in the intelligent investor, since he was looking at value stocks just had a lower multiple, and in times where market efficiency wasn't as good as it is today. But over time, I have noticed, like if you go from the decades, if you look at it over decades, the measure of what a value stock is, the multiple seems to have increased over time. If you have more and more wealth creation in the world, that money does have to find a home, right? And that is the point of entrepreneurship and innovation and technology is it creates wealth. New forms of wealth are created every day, and all of that wealth has to find a home. If you look at mid-80s versus 2024, the number of stocks to invest in is about half, even lower than that. I think the number of shares available to put your money in, I think is more than half of what it used to be in the 80s. So it just stands to reason that if you have more wealth that needs to find a home, more asset prices are going to be bid up, that you're going to have to, over time, accept lower and lower expected returns on almost everything. So with lower and lower expected returns, that translates into higher and higher multiples that you're willing to pay, or not willing, but that you pretty much have to pay. GM is up 33% year to date. That seems like respect from the market. Yeah, it only took $16 billion in stock buybacks to get that, though. Somewhere around 15 to 20 billion of market cap added, so buybacks are priced in. Yep. Also, what is your look on agency for the next few years? Well, mortgage REIT, MBS. I think MBS does well over the next few years. Once you start getting your rate cutting cycle in, I think they do well. Dividend's quite juicy, but yield is much higher than historical values. So you have to look at the yield. The price isn't always the best thing to look at the yield at. Have a look at the payout ratio as a function of the net interest income and dollar roll income, and that is well under 100%, right? So if the company is got good cash flow and it's paying its dividend with that cash flow, in a good safety measure, then if the price is too low, that's the market being incorrect. I've seen you mentioning quite some time. Did you exit the position? No. Lower rates would lead to net interest margin expansion. Lower rates would lead to balance sheet appreciation, would lead to the assets on the balance sheet being worth more if they have the sensibility to underhedge, right? Is prepayment risk real with lower rates? Yes, it is. Prepayment risk is a problem. Like when you have high rates, you'd like to have a high prepayment so you can reinvest at higher rates, but prepayments slow down. When you have lower rates, you don't want prepayments because then you got to invest at lower rates, but that's precisely when it speeds up. That's the trade-off with MBS. Uber does personalized pricing. They price based on how much they think you will be willing to pay. As a Canadian investor, would you suggest I hold cap rate and margin account over my TFSA due to the tax treatment of the dividend? Yeah, if you have other things that you can hold in your TFSA that aren't tax advantaged, I would do that. The dividend on cap rate is tax advantaged already. Is the ideal metric to evaluate REITs net operating income and funds from operations, even adjusted funds from operations, and then of course the payout as a percentage of funds from operations. But net operating income is the key metric, and the growth rate of net operating income is important. Last week you mentioned you don't think it was possible to buy cap rate for a Swiss investor. I was able to buy cap rate, car.un. Yeah, that's cap rate. I got a bit confused. Well, I mean, I'm not in Switzerland, so I can't test that theory. I just know when they put press releases out, it says not for U.S. release. So, being that I can't go to every single country and test it, I don't really know. I see the potential of the stock. I'm a bit unsure if I should increase my position 2% given the CAD exposure. Well, that is an issue. Any advice on that? I think I read this week net short positions in the CAD are something at like a record. That's usually a bullish sign because, well, who else is left to be bearish, right? Sorry, I think 139 is where I would step in and buy the Canadian if I saw it at 139. It's sitting below 137 now, 136.8. I think once the market sees that the Fed will cut rates, the FOMC may not think that they're going to cut rates, but they will be given the data. I still believe the data will be presented to them to give them permission to cut. That the differential between the Canadian and the U.S. isn't going to get as great as what people think it's going to be. Rest of my portfolio is holding mostly U.S. and Swiss assets. You're a Swiss investor. Your central bank just cut rates again, so your U.S. dollar just got stronger. Your U.S. dollar holdings got stronger. So, you could think about it as what is the likely trajectory of the value of the Swiss franc. If you followed grains recently, not really. Oats seem to be particularly interesting. Had more price volatility than usual. I'm seeing reports that supply is below 2019. Okay, I don't know anything about oats, so I'll pass on that one. Did you get your COPX and FCX puts last week on the downside? I don't think I got any more on FCX. COPX, I kept trying, but the premium just kept disappearing. So no, I didn't get anything there. Recent Sunday Q&A, you alluded to possibility of doing something with CAIA. Possibly, I don't know. So many things I could do. If I could find good people, I could do more. And it's not a matter of finding people. It's a matter of finding good people. I can't tell you how brutally difficult that is. If you ever want to experience what it's like to find talent, start a business. Start hiring people. And try to hire really good people. It's brutally difficult to do. What did you make of retail sales and the negative revision last month? I didn't really look at it because I had a traveling week, so I haven't really looked at the data. But I did notice that it was a revision. The market just doesn't seem to care. The market doesn't care. It doesn't care for some reason. It's got 6,000 in its head, and that's it. And I don't think the market will stop until it hits 6,000, and everyone says, okay, well, what was that all about? I don't think the market cares. I don't think it cares. I mean, it could have been, really bad numbers, and I still think the market would have gone up and to the right. I don't think it really gives a shit about all this stuff, honestly. Previous video you mentioned you're generally more cautious about buying LEAP calls in times of high interest rates because LEAPs get expensive. Yep. However, I counter by pointing out that the outlay you save from buying the LEAP instead of the underlying can yield. Yeah, well, that's true, right? What you save in not buying the underlying can be put in a T-bill, and that gives you positive carry. So selling a LEAP, you get negative carry, right? And you can offset some of that by putting the money. So let's say that you were going to spend $10,000, but it cost you $1,500 to buy the LEAP. You could put $8,500 in a T-bill, and all you're really out, the only carry you have is the carry on the $1,500. That's the only carry you have, the only negative carry you have. So yeah, you can do that, absolutely. But it is you're tying up capital, right? You're still tying up capital, and you could probably still do better by buying the underlying. So let's say, just to give you an example, because 5.5% isn't really a lot. Let's say you're looking at a $100 stock, and you look out 1 year and you're trying to buy calls, and the calls are $8 for the at-the-money call, which means in 1 year it has to be at least $108. Well, even if you could put the 100 away in a T-bill, you'd only have 105.50 in a year, or you would have 105.50 in a year. If the stock went from 100 to 108, you make zero on the calls, but you've outperformed the T-bill by 2.5%, right? So you could still do better. I mean, you're buying the call, so you think it's going up. Otherwise, you wouldn't buy the call. So you think it's going up. You can always do better, because the 5.5% is $5.50. The call is $8 right away. You win. It's only if it's the same price. Let's say the call was $5.50 and you could get $5.50 in the T-bill. Well, then you're indifferent. Then you're okay. But this will be priced out in part because of the risk-free rate, but also because it's volatility. The higher the volatility, if you think it's going up, the more preferable it would be to be in the underlying. Extensive analysis is always nice to watch. Any thoughts on China? No, no thoughts on China. No thoughts on Alibaba. Or Tyson, did you follow the company before? Yes, I did. Or did the news spark your interest and you started to dig deeper? No, I had followed the company before, so when I saw, I saw it dropping, I saw why it was dropping, and I said, well, that's unjustified, because I was already familiar with the company. BWA, how do you come up with the idea of EV oversupply being a reason for the sell-off? Well, if you have EV oversupply, at some point you're going to have supply. You're going to have some companies are going to say, well, let's not make as many. I mean, if there's already an oversupply of these and the customers are not showing up, let's just not make as many of these. Newsfeed does not show anything. Did you observe silver moves among EV firms since you're tracking the auto space? Well, I don't really watch a lot of EV firms, like pure EV firms. It's not my thing. And Tesla just doesn't respond to news, to actual news about the EV space, because Tesla, I don't know if you've heard, is an AI and robotics company, not a car company. I don't know if you heard that or not. When is the time to put on the home builders again? I don't know. That's a good question. I don't know. I had gotten out of it months ago because I felt that, they'd come so far so fast. I felt that there's going to be a sideways trend here for a while, and it has been sideways for a while. They really haven't done much, both either on the up or on the downside. I don't know when a good time to get back in is. I guess a 30-year with a 5 handle. I mean, we got 6.9 now. When you start seeing 5.9, 5.9, 5.85, yeah. What type of confirmation are you waiting? I don't know. I just sort of just feel it when it happens. I mean, I don't know. Thoughts on oil and oil producers over the rest of 2024? Yeah, it is a rather interesting space. Two big conflicting views on what's going on with oil. You have one energy group saying the world will be awash with oil by 2030, and another group saying the opposite. 100 shares of XOP been selling at the money call 7 days out, and that has paid reasonably well. I'm wondering if you think there is significant upside I should be aware of and stop selling the calls. I know oil runs on its own economics, hoping to hear your opinion. It kind of does run on its own economics. I'd like to say it's really affected by geopolitical events, but it just doesn't seem to care that much lately. There's a lot of consolidation in the industry going on. I think the players that are left standing are the ones that the bigger ones in the end, the ones that are left, will I think be smart enough to control their supply. I think it would be hard to get much below $70 oil at this point, only because supply would be shut down very quickly below 70. Although on the other hand, I don't see the catalyst for $100 oil at this point either. Not from where we're standing. So I would, if you're selling calls, I would go ahead and continue to sell calls. Is it logical to think of making mortgage payments as dollar cost averaging into an investment? Yes, it would. Yes, it would. Because you're not buying more of the house with each payment, right? Let's say you buy a house and you agree that you're going to pay $900,000 for a house, and you're going to pay over time, right? Well, if the value of your home drops, let's say it's now only worth $800,000. When you're making a payment, it's not as if you're buying more house, right? You're not buying more houses or a bigger house or more square footage each time. So you're not really dollar cost averaging. You're just paying the same agreed upon price for something that's worth less and less. With stocks, if you buy stocks at $100 and it drops to $90, well, you can buy more shares at $90. If it drops to $80, let's say you buy $5,000 each time. You'll actually buy more shares at $80. If it drops to $70, you spend another $5,000, you'll buy more. But if you agree to pay $100 for your shares over time, and they're at 90, but you're still paying 100, then they drop to 80, you're still paying 100, which is what you're doing with this house. You're still paying off the 900,000. You're not dollar cost averaging. You're just buying a depreciating asset. Howard Marks did an interview precisely speaking on how the market is a pendulum. Well, it is, and will swing from one extreme to the other. It does. When asked if he felt the equity market was at an extreme of greed yet, he stated that it's above average. 40% towards greed. That's, nobody really knows the number, right? It's just your best guess of where you are. It's just the best guess. Still a long way to go before he considers it greed. Yeah, I can see that. I think there are pockets of greed out there right now. Pockets. And there are events of greed. For example, copper's run up to over $5. I think, once you got 450, 460, 470, I think you had a lot of momentum traders coming in, and that's where greed starts to get a hold, and it drives prices to places where it doesn't belong at that point. I don't know if the whole market is greed driven right now, but there are pockets of greed. I think he's in the. I'm more in his camp than the opposite camp, that the market is fairly valued, and maybe even you have some people saying it's undervalued if you consider earnings growth. If you look past the next 2 years to earnings, we're undervalued. Well, how long can you keep looking past stuff, right? New applied level subscribers of last week. Is there a video in the applied series, more in-depth analysis of the yield curve? Not really. Yield curve is, I don't know too much about what you would want to do with the yield curve other than bet on duration or a curve steepener or flattener, which in the portfolio construction we did curve steepeners. I don't know what I would do on the yield curve that would help a retail trader. When you put out new content in applied series, is it written content or videos? It's videos. Not a CFA candidate, just a dumb electrician. Let's take out the word dumb, and let's take out the word just. I'm not a CFA candidate. I'm an electrician. Like you kind of think it's valuable enough that should pay to continue to receive its benefits after July 30th. Just curious as to what I would expect to see. How can I explain it? Well, it's like the word says, it's applied. So, for example, in sector studies, it would give you a good understanding of what electric utilities are all about. The electric utility sub-industry, the gold mining sub-industry, the automotive OEM sub-industry, so that if you are thinking of investing in a company in one of those industries, at least you understand what that industry is all about. Then you can sort of understand the company a little bit better. For portfolio construction, there's a lot in there in terms of types of trades that retail investors can do. I see that you did get a reply though. 2 questions. How best to follow politics for investment implications without going into depth? And when I say investment, it's not about a single stock, rather in general, global macro. I don't really pay too much attention to this stuff. It depends on what industry you're in or what sub-industry you're in. So let's say that you were in the U.S. and you really focused on retailers, let's say clothing retailers and things like that. What do you care? Politics, it really wouldn't matter much at all. If you are into sub-industries like mining or energy, then maybe you have to worry a little bit about the company that you're invested in. What locations is it in? But it is going to be very difficult to figure out what the political landscape means in all the different countries in the world that could affect you without you being nothing but a political analyst. There's no time to be an expert in everything. You're going to be a generalist in everything or a specialist in one or two things. So yeah, there are times where different market moves will happen and we trace it to some political event that most people would not have known about. Only people who were in that space paying attention to that thing. You can't possibly know it all, and I wouldn't even try to know it all. Every day something will come out that's new where you go, well, I didn't know that. I guess I should learn about that, and try to resist that need to learn absolutely everything. Focus on a sub-industry or a particular country and know that. Knowing that there's a whole bunch of stuff you're just not going to be an expert in at all. Did you get put ABR? No, they don't expire. My ABR options don't expire till July. And they are calls. My put is October. Did you buy any other Canadian REITs other than CAR? Yeah, I bought Minto, MIUN. I bought Interrent, IIP, UN, and I bought KMP, KMP.UN. What is your short-term view on DHI? Sideways? On all home builders is pretty much sideways. If there are only a few stocks reporting, why don't you just check one by one them and find out what's going on there? I don't want to. I mean, I could, but I don't want to. Before your business, were you working for someone else? University? If so, for how long? I don't really know off the top of my head. I'd have to calculate. Did you enjoy the work? Somewhat. I somewhat enjoyed it. Somewhat. I enjoyed my time in the classroom. But when you work for universities, you also have to do a lot of research and publishing. Hated academic research. What a waste of time. Waste of time. If CapREIT is returning the capital, isn't that lowering your cost base for tax purposes? Yep. So instead of a dividend, you get an eventual capital gain in the future. Yes, it does. Kraft, trading around $32.50 share, dividend yield just under 5%, market cap $40 billion, 2023 net income 2.8, operating cash flow almost $4 billion. Decided to sell 30-day expiration put options, and he thought the company at current prices. Not really. I know that consumer staples have been under pressure for a while. It's a decent enough dividend yield. It's a staple of large cap value funds. So I think you're okay there. I think you got good institutional support on this one. If you had to hire an analyst to work for you, what skills would you require them to have, considering that an AI model can do almost everything a junior analyst can do? No, it can't. No, it can't. Industry analyst, I don't know an AI model that can do what an industry analyst can. A company analyst is not going to be able to think. AI doesn't think non-linear. AI thinks pretty much linear. It looks for trends and it exploits as many trends as it can find. It would never find a turning point. It would never identify a turning point. Never. I doubt an AI algorithm would have made some of the calls that I've made. I extremely doubt that it ever would have. Now, when I say that, what I'm saying is that it probably would have avoided some of the mistakes I've made, but it would have avoided some of the successes as well. It would have made, I think, a lot of the more safer bets. I don't think that it would have shorted any company that was hitting its highs and seemed to be unstoppable. It wouldn't be able to make that kind of call. I really think that we need to focus on the first letter of AI, artificial. And it will always be artificial. And I think we need to focus on that. Data processing, yeah, it can do data processing way better than a human. But intuition and experience, no. Gut feel, no. Being able to think and to be strategic in the moment, no. I hold out no hope for the artificial part to actually do that. CFA level 2 commodities, you present the theory of storage, where futures price equals spot price plus storage plus convenience yield. Well, minus convenience yield, yeah. What is a convenience yield meant to represent? It's meant to represent how convenient it would be to have a commodity on hand if supply was scarce, right? Then you would say, well, I got some, that's convenient. So it just, for running a business or doing whatever you're doing, it's just the convenience of having it in inventory as opposed to going out into the market and trying to buy it. If there's lots of inventory, then, well, I don't really need to hold it in my warehouse. It's just as easy for me to go into the spot market and buy it. But if the spot market is tight, or supply chains have been disrupted and I have to go even further to get my supply, then it'd be kind of convenient if I had it around, right? That's all that is meant to be. It seems to me it's just a different word for hedging. Okay. In which case the theory is just hedging pressure theory plus storage costs. Okay, you can think of it that way. I don't know that it would change the futures price, if you thought about it differently, but if it helps you get your head around the idea of convenience, then sure. CFA Level 3 Canada, a shitty job. According to you, after gaining experience and profitability in the market regularly, at what point do you think is right in terms of capital or experience to start hiring people and start a hedge fund by raising some funds, as this is what I am aiming for? Well, once you have a track record, if you can raise funds, then do it. That's usually the hardest part, is getting people to give you their money. And then once you have it, actually producing a return for them. That's not easy. When do you think CAR.UN will warrant a premium to book value per share? When interest rates are clearly on the way down, right? When interest rates are on the way down for reasons other than a bad economy. So would it be towards the end of the rate cutting cycle? No. I think as soon as the Bank of Canada signals another rate cut and that they're willing to go, I think you'll get it. Also, I think once you get past June 25th, back it up, June 23rd, or actually the 23rd is a Sunday. One more day, June 21st. I think Canadian REITs will be under pressure. And then Monday, it wouldn't surprise me if on the 24th, REITs rallied. Why? What's going on? June 25th is the cutoff for the capital gains inclusion. If you have a capital gain before that, the inclusion rate is 50%. After that is 66%. So any gains in anything right now are being taken. So that the inclusion rate's only 50%, not 66%. So you got selling pressure going on in stocks that might have some holders that have capital gains. You might have had some holders who own cap REIT, from years and years ago. Might be sitting on, they might have bought it at $20 or 25 years ago and have held it for years and years. And well, you can sell it now, or you can, sell it in a year from now and have a much higher capital gains inclusion. So maybe it makes sense for them from a tax perspective to, to get out of one or to take their capital gain. This is just I'm just thinking out loud about why, what seems to me a home run hit. It seems to me an easy decision to make. Canadian REITs, for God's sake. Apartment REITs especially. It seems to me such a home run hit. Why are they struggling at 20 to 30% below book value? And the only thing I can think of, June 25th, you have the capital gains inclusion, the new inclusion rate kicking in, and there might be selling before that. So yeah, if we rally on Monday the 24th, because it's T+2 settlement, right? So you got to sell by the 23rd to say that you're out by the 25th. So if we rally on Monday, then okay, then that had something to do with it. What is your forecast on GTA housing price short term and longer term? I think the current market would support prices where they are. I know you're bullish on them, but what happens when they become too unaffordable? Well, it's hard for them to become unaffordable, right? Um, what has happened over time, especially with immigration, is you don't have two incomes in a household. You don't even have three incomes in the household. You have 4 to 6 incomes in the household. You just have more people in the house, right? So the density of the neighborhoods will increase at a faster rate than prices would drop. So it's affordable if you're 3, 4, 5, 6 people buying the house. I feel like housing price is different than CAR because the tenants for CAR pay below market rent, so the yearly rent will increase no matter what, and turnovers are even better. New tenants pay 20% more in market rent. Housing price seems to be in a correction mode, which contradicts the financial theory. It says, curious to hear your thoughts about it. Well, you can't compare a housing price with a rental price. Let's say that you're renting a place for $2,000 a month, and that you are investing $1,000 a month, and then you decide to buy a house and it's costing you $3,000 a month. You say, "My God, look at this! I've gone from 2 to 3,000. I can't save anymore." Yes, you are saving. Every payment you make, you get equity. Every payment you make, you're building equity. And you bought a house at one price that over time will appreciate over time, and your payments will decrease over time or the interest that you pay decreases over time, and the principal you pay increases over time. It is one price. Rent this $2,000 apartment for 20 years, and you have zero equity. Buy this house at $3,000 a month for 20 years, and you're going to have some equity. So you are actually still saving. The amount you pay principal plus interest, right? Take the principal. Your principal is your savings. The interest is your rent. That's the true rent that you're paying, and every month your rent goes down. Every month your rent goes down, and you can think of the principal as, well, I'm just forcing myself to save. So if 50% of my income is going to pay my mortgage, I'm really forcing myself to save because it's equity. You're forcing yourself to save. So you can't just say rent is $2,000 but mortgage payments are $3,000. You have to say my rent plus savings equal what? And then what is the principal component of my payment in relation to what I was saving? Keep in mind, after you finish paying your mortgage, you own an asset. After you finish paying your rent, you own sweet fuck all. Well, you own sweet nothing. Let's take out the bad word. Have you heard of Diageo? Yeah, alcohol, right? Multinational alcoholic beverage. Oh, there we go. Their stock has been on downward trajectory. Most analysts by recommendation. It's alcohol at the end of the day. Yeah, but alcohol consumption has been going down. If you look at generation after generation, look at the 20-something today versus when I was 20-something, two things have gone down dramatically over that period of time: smoking and drinking. The 20-somethings today are less inclined to drink, more inclined to do pills, but less inclined to drink, more inclined to vape and less inclined to smoke. Tastes have changed over time, that the amount of older generation drinkers that are falling off are not being replaced by younger generations that are drinking. And you have some cultures which alcohol is just not a thing, right? So alcohol is a tough game. Tesla and FSD and retail, like GME and retail, could be scary. Yeah. Are there captions on applied level videos? No. If not, I would find them really helpful since volume tends to be low. It's not me. I can tell you right now, it's not my side. If volume is low, then there's something on your end. Because I listened to my video. For a while, there were people complaining about the low volume. I'd listen to my videos. I go, I can hear them. They're just as loud as every other video. It's not on my side. It's not on my side. I don't know what to say on that one. Stellantis sending all engineers back to office. You're going to see more of that. Work from home is not a thing. It is not a thing. It's only for people who don't want to work at home. What was the last story? The popular story last week on this is Bank of America fired a whole bunch of people for mouse jiggling. There's actual software you can buy, and apparently like off of Amazon or wherever it was, and something like 10,000 copies were sold, where the software would jiggle your mouse every now and then, or make your mouse jiggle on the screen and hit keys at random, so that if you had keyboard tracking or mouse tracking software from work, it would look like you're doing something. Well, it wouldn't sell that much if it wasn't a thing. So it's clearly a thing. Faking work from home is clearly a thing. It's not a thing. It's not a thing. It's just a matter of time. They'll all be back at the office. It's just not a thing. Starting to question any rationale in investing in anything Canadian. S&P 500 massively outperforming Canadian equities. Canadian GDP going nowhere. Canada just feels like dead money. I hope I'm wrong. Yeah. 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 I think GME should buy $3 billion worth of Bitcoins. Yeah. Maybe. Tashikini is a CFA. Maybe that adds some credibility to her Tesla forecast. No, it does not. That forecast is not for serious investors. That is not a serious forecast. It is a forecast for the Tesla investor. It is meant to tell them what they want to hear. They want to hear that it's going to be worth that much. And if you want to push the price up, you got to tell them what they want to hear. You don't have to believe it. You just have to believe that they will believe it. That's all you have to do. You lie to people who want to be lied to. Lie to people who want to be lied to, and you'll make millions. Tell the truth to people who want to be lied to, and well, you're not going to be around for long. Lie to people who want to be lied to. Please uncover the British stock. Lots of Brits like myself on here, I believe. I'm not ready yet, and I don't want to say it, because if I do, some of you might buy it. And after a couple of weeks of looking at this thing, I might say, yeah, I found the problem. I don't want this. I wouldn't touch this with a 10-foot pole. I haven't found the problem yet, but I might find the problem, right? So I don't want to say it yet, but I will soon, but I just don't want to say anything yet. Instead of shorting the personalized pricing companies, perhaps going long privacy companies. I'm not shorting personalized pricing companies because I disagree with the strategy. It's a regulatory thing. I think regulation is going to come in. I think some politician somewhere is going to get a snit on about this and say this is unfair. I think somebody somewhere in some organization, in some government organization, is going to say this is illegal, or find a way for it to be illegal, or something along those lines. I don't know anybody who enjoys it. I don't know anybody who says I paid more than my neighbor. I'm good with that. I don't know anybody who feels that their bill being a reflection of their ability to pay is fair. I mean, we all hate taxes. We hate it when the government does that to us. Well, now companies are doing that to us, figuring out that, well, you make more money, so you should pay more. Your fair share. You should pay your fair share. So now we're getting a wealth tax placed on us by corporations. Somebody somewhere is going to have a problem with that. And if there was a way to short that, I would. If I mention a certain digital asset, YouTube AI censors my comments. Yeah, I got rid of for BTC and Bitcoin. Reason is most of the scam comments of, I can't believe you're talking about Mrs. Roberta Wilson on here. Mrs. Roberta Wilson has made me 715 Bitcoin in 4 days. Next comment. Mrs. Roberta Wilson, how do I get a hold of her? Next comment. You get a hold of her on Telegram. Well, what's her number? Like, you know those stupid things? Well, it's always crypto. Why is it always crypto? Why is it always crypto? How come it's not timeshares? Or flying cars or something? It's always crypto. It's always crypto. Anyways, so I block out certain words. So if you say it, it'll block you. I respectfully disagree with you dismissing the coin as requiring a killer app to be valuable. Ooh, I've read this one, and I've got my response for you. The value is not in an application, it's in the properties of the public ledger. Define scarcity and issuance schedule. You're right. Bitcoin has a limited number of Bitcoin. And there are an unlimited number of limited coins. How many are we at now? 1,300, 1,400 possible coins. Fast forward another 5-6 years, 2,000, 3,000 coins, all limited, all limited. An unlimited amount of a limited coin to me sounds like an infinite amount. Decentralization, no single point of failure. Fantastic. Love decentralization. Perfect. What's that 1-800 number I call when I want to stop Adobe from billing my account? What's Bitcoin's 1-800 number for customer service? If you could just type that into the comment. See, when something goes wrong in my bank account, I have a 1-800 number I can call and say I didn't do this, and it's done. No questions asked. It's taken care of. If you can give me the 1-800 number for Bitcoin. If I lose my password on my bank website, I can get it back. If I lose my password on an online wallet for Bitcoin, it's lost forever. If only I had a 1-800 number I can call. That decentralized feature. So good, right? Inability to be censored. Nobody can stop you from transferring in or out to anybody anywhere. I don't have that problem. Who's stopping me from transferring to anybody anywhere? I've done it my whole life. I've never once been stopped from transferring money from my bank. Never once have I been stopped. You know what they asked me? Are you sure this is the right destination account? Do you know why you're transferring the money? Are you sure about this? Because there have been scams. Is there somebody on the Bitcoin side that will ask me if I'm sure about this because there are scams? I've never been asked. I've never been stopped. I've transferred, sometimes in the millions I've transferred. I've never once been stopped. Never once been stopped. Near zero cost of ownership. That's not true. That's not true. Go ahead and put 130,000 into Bitcoin and then head down to the dealership to buy that Yukon Denali and say, here you go, and say, oh shit, now it's only 123. Damn it, the price fell on my way here. It's 123. That just cost you $7,000 to own that. Zero cost of ownership. It has a cost of ownership. It fluctuates. You see that? It fluctuates. Low transaction cost. That's not true. If you have cash, you got to get Bitcoin. That's not a low transaction cost. I don't know if you've looked at the different costs of getting your money into the Bitcoin. And then when you got to get it out, you pay another transaction cost. So none of those things are true. Now let's just say I believe you. Let's just say I go along with all these points and I say, okay, I agree. They're all wonderful points. I agree with you. I just need you to answer one question for me. What problem do I currently have right now that this is a solution for? If you could just tell me what problem I have without it borderlining on criminal or terrorist activities. Oh, you can send $1 million to Russia overnight, no questions asked. Why would I ever want to do that? Why would I ever be doing that unless I was a criminal, right? If you could just tell me what problem your parents have right now that this is a solution for, that would help. Tell me what problem that you think somebody has right now, and that market is big enough, that this problem is so big that it's a global problem, because you need a global problem to justify these kind of prices. What problem do I have that this is a solution for? So I've said this before, it's a great solution to a problem nobody really has. So even if I agree to all these things, what problem is being solved? That's why it needs a killer app. Because you need to find a problem that I have that this blockchain can solve, and in using the blockchain, crypto would have to be used to motivate other people to process the transaction, because it's decentralized, so there is no centralized processor here. At least Bitcoin is decentralized. We can't say that for every blockchain and cryptocurrency out there. So again, you tell me what problem I have. With the internet, I can tell you what problems I have that the internet solves. Cell phone, I could tell you what problems I have that the cell phone solves. Vehicles, I could tell you what problem I have that the vehicle solves. Almost every technology I have, I can tell you what problem it solves. For all the technologies I do not have, you know why I don't have them? I don't have the problem. I don't have the problem that this is a solution for. I don't think anybody does. Put simply, it's a digital asset that anyone can use and nobody can prevent the usage. That's not true. That's not true. There are countries that have banned Bitcoin altogether. And honestly, if I want to stop Bitcoin from happening, I just shut down the internet in my country. There, what are you going to do now? What are you going to do? You are using Bitcoin in your house against my rules. I'll shut off the power to your house. What are you going to do? I just prevented you from using it. You don't have electricity. You don't get to use Bitcoin. But you could still use gold. You could still use the US dollar. You could still use your currency. You could still use a lot of things, but not in a blackout. In a blackout, there is no Bitcoin. You're broke. You're broke in a blackout. Hey, that rhymes. That should be a new t-shirt slogan with a Bitcoin with a, you have that Bitcoin thing and then you have one of these things here. You're broke in a blackout. I just think these things up. I'm not kidding you. Nobody can prevent the usage of or tamper with. That's not true. And it's been battle tested as such for over a decade with billions of dollars in bounty to anybody who can crack it. No. Same with any currency. Same with any currency, and people do it all the time. I don't think that any of this is true, really, in the sense that you're writing it. And even if it was, again, I put the challenge out. Name a problem I have that this is a solution for. And there we go. Quick work of that. Please tell us how Nietzsche's philosophy has shaped you as an individual and helped you in life. Do you strive to become an Ubermensch, or do you consider yourself one? Oh, yeah, so that's such an overused word. I don't think that Nietzsche really meant it in the Superman way that it was taken to be after. It's not that you're a Superman, that you are somehow this man above men, although we did kind of mean it in that sort of way. It means that you've risen above the human condition, that you are not going to be defined by the human condition as defined by the masses, that you're not going to buy into a morality that is handed to you. That does not mean you're immoral. It just means that it's a morality, whatever morality you have come to it on your own. That you're not going to take a morality because it's been handed down to you by a religion or by people who want to keep you down. Because a lot of morality is meant, at least this is what Nietzsche suggests, a lot of morality is really meant to keep down the strong. That does not mean that you're an evil person. That does not mean you take things from other people. It probably means you're as good as anybody else. But that you've arrived to the conclusion on your own without it being told to you. You have overcome that human condition, right? So that you sort of start thinking about how you conduct yourself in a way where you have all the control and all the power over what you do. That you are not being good by default, you're being good by choice in knowing that you can be very dangerous, right? So that is sort of what it means to be an Ubermensch, to overcome the human condition. How has it shaped me as an individual and helped me in life? I want you to think about saying something here, and ask yourself how it would change you. I'm going to give you a scenario. Let's say that you have a job that you hate. You just don't like your job at all, but you have rent to pay, and you have a family. There is an economic reality to life. Just that simple, right? So you hate your job. What's advice that people like to throw out whenever you hate your job? Just quit. If you hate your job, just quit. Well, that's a stupid choice, right? That's stupid, because if I quit, then things are just going to be worse. Right now, all I hate is my job, but at least I'm making money to pay rent and pay for and support my family. If I quit, I don't even have that. But here's the difference. some people say, I have no choice. And you may think that when you're in a bad situation, that you do have no choice. And you hear people say that sometimes, I have no choice. I have no choice. I got to keep doing this. I mean, I need a paycheck. I got to pay the rent. I got no choice. I just got to live with this. I got no choice. But you do have a choice. You can quit. You can quit, but you can say, yeah, but that's not a good choice. But you do have a choice, you see. You can quit, but you can reject it and say, I choose to stay because my other options are just worse. When you say I have no choice, you lose your power. But when you say, I do have a choice, but it's just not a very good choice, so I choose to stay, you keep your power. Now, how would that change the way that you approach the world? It will change your attitude. It will change the way you interact with other people. When you have no choice, you know what happens to you? You become angry and bitter and petty over time. But when you recognize that, no, I had a choice. They're just not very good choices. So I'm going to choose to keep this one. You avoid all of that. You sort of keep control even in situations where you have no control. Now, it's kind of a contrived example here, but I'm trying to lay out the difference between the two situations, even though you stay in the same situation, just by changing the way you conceive of it, that you do have a choice. It's just a terrible choice, that you have made the choice to stay because you have looked at your other choices. You no longer say things like, I have no choice. And you keep your power. How would that change you in life? Sounds like an emotional bias. What does? Whole point behind big data was always that you maximize profits with personalized no? You're talking about my attitude about the personalized pricing. Pharmaceutical companies already do this at the country level. What's so different at the individual level? Well, look, your data is being used against you. I mean, I can see doing something at a group level. Insurance does this all the time at a group level. But let's say that insurance started not looking at your driving record, but looked at your income and said, oh, you make that much. Your insurance is $8,000 a year. Meanwhile, somebody with the same record as you is paying $800 a year because they have a minimum wage job. And you know, your driving record is the same as their driving record. It's just you make more. Are you comfortable with that? Are you saying, well, that's just maximizing profit? That's just maximizing profit. Are you comfortable with that? Right? So it's that part that I don't like. But if the insurance company said, looking at your age, looking at your profession, looking at the neighborhood you live in and the truck you drive in, over how many drivers in that group, this is the average in that group in terms of the amount of accidents and the price per claim, and then priced out the group based on those things, I would say, well, that's the group. But insurance companies do give me the chance to differentiate myself from the group by choosing my deductible. So if I choose $1,000 deductible, they say, wow, a guy's pretty confident. Okay, maybe he's in the left tail of his distribution and has much fewer accidents. So I've self-selected where in the distribution I am. But when you target me not based on anything to do with the rate that I would pay for insurance, but you start bringing in things like how much money you got, how much are you worth, how successful have you been. That's how I'm going to base your rate on. So you come into my restaurant, I give you a menu, you're looking down, you go, how much is the chicken Caesar salad? I don't know. Can I see your balance sheet and your income statements? How much you got? Where's your last 3 years of tax returns? I'll tell you how much you pay if you tell me how much you earn. Would you say, oh, wow, the guy's just maximizing his profits, I admire that? And would you then participate in that? Would you willingly participate in that? The only people who would participate in that are those who can show that, well, I hardly make anything, so I should hardly pay anything. You see where I'm going with that? No, I think it is theft, pure and simple. When you start billing me, not based on the cost to you, or the inconvenience to you, or the value you provide, but you bill me based purely on my willingness and ability to pay. Never mind willingness, but ability. If you want me to show my willingness, have an auction, for God's sake. Auction off everything. Everything's an auction. How's that? But my ability, when you bill me based on my ability to pay, and no other reason than my ability to pay, I got a huge problem with that. Right? That in my mind is, if it's not illegal, it's highly immoral. And I got a big problem with that. And I do live up to that. I don't bill anybody based on who they are, based on their success. It's not like I say, okay, CFA candidates, you pay $320 if you're a charter holder, you must be making good money, you must have a job somewhere, you pay $5,000. I don't do that at all. Everybody pays the same price. Everybody pays the same price. Except, of course, if you're in the CFA community, then you pay a lower price. But it's not individualized. That is target. That's a target market that you're hitting, right? I have no problem with target marketing, but this individualized pricing. What I said in the Sunday Outlook was, I'm hearing more and more pushback on this, and it would not surprise me if at some point some politician or regulator decided to make an issue of it. Would not surprise me. Your analysis on Tesla, very coherent. I agree with a lot of it. One thing I would say to try and advise you away from a short risk reversal, which has infinite losses. I'm not concerned. I think I answered this one on Sunday. Yeah, I'm aware of what a short call would be. But if it appeared that it was going to be a problem, you can always buy shares of the underlying to delta hedge. You can always hedge if you see it coming. No one is going to buy Tesla at this valuation. It's not like I'm going to wake up one morning and there's a $900 billion takeout on Tesla from $580 billion to not. No one. That's not going to happen. That's not going to sneak up on me. You see, I would never short GM because somebody could take it out. I would never short Oxy because someone could take it out. But no one's going to take out Tesla. No. There it is. There. So I don't have to worry about waking up to that. So any issue on the upside, I would see it coming. I can delta hedge. Let's see. Is that you say in passing that other companies are ahead of Tesla in self-driving? Yep. It seems you are very sure about it. Yep. Although giving this assumption a fair and rational assessment, I have. Look at the tech where it is going, and where it has been only 1 year ago, and most importantly, how the software works. You could say that with every car company that has autonomous driving right now. You could say that to every car company, and just recently, a Canadian autonomous company just got a $200 million investment because of the progress on their software. You could say that with every company out there. End-to-end neural nets versus hard-coded training on the ring-fenced area. Please give this comment some attention before doing the risk reversal trade. Go for puts, if anything. I did the risk reversal. If I'm going to say that this is a short, if I'm going to say Tesla is a $40 stock, then I think I should risk some loss if I'm wrong. Not just words, but actually put money up. So I did. Let's see what happens. So far, it's not been paying, but it hasn't been losing. Tesla runs up to 185, 188, 190, and then it comes right back down again. What did we find out this morning? European deliveries down 34% for the month. Their next earnings report has a high probability of showing negative EPS. Negative EPS. You got to think about how long it's going to take for the robotaxi thing to actually happen. And if they start printing negative EPS, you got to look at potential of cash burn to get that done. That was RIM's problem. They didn't have the cash. They did not have the cash to compete. All right? So Tesla does have a lot of cash. If you net out their debt, they still have a lot of cash. But if they start building the facility in Mexico, building the facility in India, they keep printing negative EPS, big huge cash burn. They might not be able to get to the place where they can get it done. And I just don't believe in level 4 unrestricted. An unrestricted level 4. They're already way behind. I mean, I think if they had some kind of level 4 robotaxi that they were testing somewhere, some geofenced area somewhere, I could at least look at that and say, okay, well, you've got something, but this going for coast to coast, not going to work. The insurance industry is nowhere near there, and the regulation is nowhere near there. It is nothing more than a pipe dream at this point in time. It cannot happen. It cannot happen. And there's a lot of places in the world where this stuff is simply not going to work. I feel pretty confident. Now, I'm not saying that Tesla is going to lose and some other company is going to win. I don't think any car gets to level 5, which is a level 4 without geofencing. I don't think any car gets to level 5. In the next 10 years. Heck, we'll even go, let's go 15 years. In the next 15 years, I don't think you're going to see a level 5. Tesla's overvalued. Seems you will always have a bearish bias against them, against the valuation. Yep. If you look at Musk's other companies, it doesn't matter about his other companies. It's not Tesla. It's not Tesla, right? They've literally been making impossible possible. 15 years ago, people were saying Tesla will never be able to compete with established car companies. I still believe that to be a true statement. They didn't compete with established car companies. No one was doing EV. They didn't compete with established car companies. Now they have to. All the way up to 2020, they really weren't competing with established car companies. Now they have to, and they're losing market share. They're recording their first year of drop in volumes year over year. Margins are little more than what you can get on an ICE vehicle now, and they're an EV, little more than you can get on an ICE vehicle. They haven't had to compete with established car companies. Now they have to, and they're not doing very well in doing it. Who are literally decades ahead of Tesla in terms of car manufacturing. And they still are. And they will be. If we look at Tesla's introduction of the Roadster, their high-end vehicle, what they wanted to start with, make the money on the high-end vehicle, get a mid vehicle, then move into a lower mass market vehicle. 4 years. 4 years to sell, I forget how many they sold. I had already done the numbers on this, but I forget the actual numbers, what they sold. GM, if you think about the Hummer was their version of the Roadster. Start with a high-end vehicle and then move downwards. GM did double the amount in half the time. So if we're going to compare car companies with car companies, you have to compare them at the same point in the timeline. So if we look at Tesla's timeline, they started here. It took them 4 years to get to a certain point. If GM started here, you can't compare them here. You have to compare these 2 points. GM did it in half the time, double the amount on the Hummer. Twice as many Hummers as Tesla did Roadsters in half the time. Why? Because they have 100 years of this experience behind them. Very deep supply channels. Very, very investment-grade balance sheets. Tesla has not had to compete head-to-head with these companies yet. Now they have to. And Tesla will one day be taken over by one of the established brands. And, well, they are being overtaken. And I think it's just a matter of time before Tesla falls out of the top 10, even the top 20. I think it's just a matter of time. I wouldn't dismiss Musk. I'm not dismissing Musk. But at the same time, I would not dismiss the entire car industry and the economics and the gravity of that industry, considering how many successful businesses he has helped create. Well, maybe he's a better creator than he is a caretaker, right? Venture capitalists know this, and there's a difference between a startup CEO and a going concern CEO. So here's your startup. You need a particular type of CEO here. You need a different type of CEO here. And then when it becomes an established company, you need a different type of CEO here. You can't always have this CEO in all stages of your growth. At some point, you have to transition to a CEO that understands a maturer company. So you have to, maybe he's really good at this part and maybe at the growth part, but then transitioning to here. Because if you keep trying to grow a company, as opposed to saying, okay, we've grown, we've got to start becoming established now. If you keep trying to do this, you will implode that company. And I think he may be trying to grow a company that he should more than rightly step aside on and let somebody else run the car company. And then he can step aside and say, okay, well, I will run the venture capital firm inside the startup company, which is investing in humanoid robots and this other stuff until it gets critical mass, and then I will step aside and let somebody else run it for a while. That if he did that, that might change my mind about a $40 price tag. Then I might raise my price target to $80 or $100. Musk's Tesla market cap prediction has the same gravitas as his annual FSD is coming next year. Robotaxis by 2020 and his 0 new COVID cases in April. Oh yeah, that's right. I forgot about that one. Seems to be counting on his yes men having goldfish memory. AI bubble is real. As soon as there's weakness, market will tank. I think you need a period of time of some very visible failures of AI to deliver on its promise before you really start to see that. Almost done here. Mentioned a couple of times non-Canadians probably can't invest in cap REIT. Can you explain why? I think if we addressed that earlier. Are undervalued stocks preferable underlying candidates for selling puts? Yes, they are. You seem to sell puts on underlying that have experienced price pullback or undervalued. Yeah, because I usually win. On those, and I can usually do them, multiple months in a row. So yeah, I love finding a company that the market just doesn't want to show any respect to, because I don't think it's going to get much cheaper than where it is, and if it did, I'd own it. And they're great to sell puts on. And well, that'll do it.